All right, welcome back. Let's skip back to shares of Tesla. That stock in the red, despite beating analyst expectations on both the top and the bottom line. Here's what the CEO, Elon Musk, said on the call last night about the impact of that global chip shortage.
Q1 had some of the most difficult supply chain challenges that we've ever experienced in the life of Tesla. Insane difficulties with supply chain. With parts over the whole range of parts. Obviously, people have heard about the chip shortage. This is a huge problem.
Obviously, Tesla not the only one facing that problem, but they do have some other issues. And joining us right now to talk about that is Gene Munster. He's Loop Ventures founder and managing partner. Also, Gordon Johnson, who's the founder and CEO at GLJ Research. Let me ask you guys first a couple of questions. And I'm going to start with you, Gene, just because there are a lot of things that I know Gordon's going to point out. But before we get into the mass of all the things that he's looking at, just a couple of issues. First of all, without the EV credits, the company would have missed in terms of the sales number. And they took and included Bitcoin sales as part of revenue. What do you think of those two issues?
Well, you have to subtract those from the overall performance, but they're still relatively small in the grand scheme of things. And I think that's representative of the Tesla story more broadly, is which real factors do you focus on? Which are the most important factors? And so the simple takeaway is those are negatives that you describe, but it doesn't change the long-term trajectory. And I'd love Gordon's take on this. Ultimately, my view is this is rare what's happening with Tesla, which is, in my view, a definitional growth story. We have 109% vehicle delivery. Despite all of those supply chain issues, as you said, other automotive companies had those same issues. It was 61% in December, 44% in September. These are rare, and I would just anchor my thoughts is that you have to pick what I would refer to as pressure points on any given company. In the case of Tesla, I think deliveries are the most important ones, and those demand is really good now.
Hey, Gordon, on top of everything that Gene just laid out, you've also got the issue of there not being a seasonal drop in the first quarter like Tesla has seen in the past. That's pretty impressive in terms of what it means for consumer demand. What do you take away from all of this?
Right. So I just want to highlight, if you look at Bloomberg estimates, Tesla missed both on the top line and bottom line. So I don't know why everybody's saying they beat. They actually missed on the Bloomberg estimates. But, I mean, so once again, right, again and again and again, every quarter, this is the fifth straight quarter, excluding credit sales, that Tesla has lost money. In fact, if you exclude the one-time credit sales, the one-time sales associated with Bitcoin, they lost $181 million this quarter versus $131 million last quarter. So record deliveries, but they're losing more money the more cars they deliver. So they're selling more cars, but they're cutting prices significantly to lose money. And another thing I think is important, look at their other business segments, right? In their solar segment, their gross margins were negative 20% versus negative 8% last quarter. They are not winning in that segment. And then if you look at their energy segment, where, Chamath has said they're going to be a utility, 13 straight quarters of negative gross margins. I don't know what people are talking about when they say this isn't a car company. Their other segments are losing significant money. And if you take a step back, their free cash flow fell by $1.65 billion. They're now excluded when you take the capex they shift over to cash flow from operations. They're now burning money again. I don't know what Gene is saying when he says these numbers are small, the credit revenues and the sales of Bitcoin. They did about $400 million in revenue, but when you exclude those numbers, you're talking about almost a $200 million loss in a record delivery quarter. Listen, Tesla is burning money. This is not a viable business model. And they're losing share in Europe and China, and their sales in the U.S. were down. So for a company that trades at almost 20 times sales and 119 times earnings, you need to see growth, and their sales actually fell sequentially. So this is a bad print across the board. And to say that the long-term outlook is good when the numbers just keep getting worse and worse, we just don't understand it, Gene. I mean, you got to, at some point, look at reality. FSD, they delayed it again. They just delayed FSD again on the conference call. So you got to look at reality.